Today's economy sits at the intersection of politics, technology, and labor markets. President Trump is actively curbing green energy initiatives, Elon Musk is turning X into a financial trading hub, and Britain's youth unemployment rate has climbed to the worst in Europe, all of which are reshaping markets and livelihoods. Let's unpack these major developments and reveal what they mean for you. Ultimately, this clash reflects a broader ideological debate, whether government should actively guide energy transitions, or whether markets and fossil fuel industries should steer the future. These moves include executive actions that defund or cut permits for new renewable projects while expanding fossil fuel production and infrastructure. According to outside critics, these actions have already reduced investment in clean energy and may raise utility costs for consumers. Why this shift matters. First, the manufacturing sector is impacted as renewables, especially wind and solar, are major drivers of domestic manufacturing jobs. Components like turbines, panels, and batteries are often produced in local plants. Cuts in renewable incentives lead to lower factory output, layoffs in supply chains, and weaker revenue for firms that had been planning expansion. Second, consumer costs are a concern. Experts argue that renewables remain among the cheapest sources of new generation capacity. When projects are halted and older, less efficient fossil plants are kept running, average electricity costs can rise. In a bold pivot, Elon Musk's social media platform X is preparing to integrate stock and cryptocurrency trading directly into the user experience, a move that could reshape how millions engage with markets. This isn't just a new feature, it's a strategic evolution that positions X as a financial ecosystem, similar in scope to China's WeChat, which blends messaging with payments, investments, and commerce. Why it matters. First, it democratizes financial access. By allowing users to buy and trade stocks and crypto within a social platform, X lowers barriers to market participation. Small-cap investors and casual users could enter markets without needing separate broker accounts. Second, engagement and monetization are key for Musk. Linking financial services to social engagement offers a new revenue stream for a platform that has struggled with declining ad revenue since rebranding from Twitter. It aligns with Musk's broader moves to expand X's capabilities beyond messaging towards super app status. Third, risks and challenges are present. Regulating financial transactions on a social app raises legal and compliance questions, especially around market manipulation, investor protection, and data privacy. The Securities and Exchange Commission and other regulators may scrutinize how trades are executed, how risk is disclosed, and how user funds are secured. In this light, Musk's strategy isn't just about innovation, it's about redefining the intersection of social behavior and finance. This isn't simply a cyclical recessionary issue, it's a structural challenge that demands targeted policy, response, education reform, and stronger links between training institutions and employers. According to official statistics, the youth jobless rate in the UK now stands above 14%, higher than the European Union average and well above the Organization for Economic Cooperation and Development average. Why this is significant? First, labor market disparities are evident. Despite overall unemployment in Europe trending downward for most age groups, young workers, typically defined as ages 16 to 24, face the highest joblessness, a trend seen in both UK government reports and Organization for Economic Cooperation and Development data. Second, structural barriers contribute to this trend. There is a mismatch between skills and job opportunities, especially as artificial intelligence and automation reshape entry-level positions. Economic inactivity due to education, training gaps, or NEET status, not in education, employment, or training, is also a factor. Estimates suggest nearly 1 million young Britons fall into this category. Slower job creation in key sectors like hospitality, retail, and apprenticeships, where young people traditionally find entry work, exacerbates the problem. From energy policy to social finance innovation to labor market crises, these stories reflect a world in flux. Decisions made today in Washington, London, and Silicon Valley will influence jobs, technologies, and economic opportunities for years. If you found this breakdown insightful, hit subscribe for more deep dives into the news shaping markets and society.